Right, it's a daily price action journal. It's Tuesday, the 6th of July. and quite a lot of volatility today in the markets compared to the US bank holiday yesterday. But just a very frustrating day for me. I didn't lose much. I barely lost anything, but I could have won a lot. So, quite frustrating. Very frustrating. But I ended up closing my trade as we had the new 4 hour open. And also we had some, to be fair, if I was to close my trade, if I was to close my trade in this scenario, I think more times than not, it'd be the right thing to do. But this time, well, today it just melted. Well, it just completely, my trade went completely right, and I could have captured a lot of pips really. It's disappointing, but my actual sell play was quite high risk initially, and I was very nearly stopped out as well. So I was quite lucky to even only lose a very small amount. I only lost 0.25%, and half my risk. Half my risk when I got close to break even, and then I closed out when we had that 4 hour open. As I anticipated, we could get that 4 hour top wick and get out. Could be stopped out quite easily. We also had the US PMI results. Which was worse than expected, but still, it was worse than expected today. That was at 3. That was at 3 p.m. I think that gave the continued downside move on GJ with JPY being a safe haven. As soon as this news results released, we get that continued push down on the hourly candle. The new hour opens and the results are released, and JPY gains strength on the back of that, and that gives the continuation move of this sell all the way down to 152,500. This happens a lot to me. I close out too early and then trade goes my way. Just got to keep learning from it. In terms of managing this trade, as you can see, like I said, I've closed out on the new 4 hour open, but this is the top wick it gave for the 4 hour. These two candles here, in fact, that was the top wick for the 4 hour. It gave very small. In terms of managing it, I'm just gonna, let's say I did hold the trade. In terms of managing it, stops at break even once we break this low here, because if price goes back in within this range, you'd either close a small win or just set it at break even if price was to engulf and close back within this range. But yeah, stops at break even at this point, and then you get a consolidation phase. But notice how price fails to trade above this minor resistance, and this is the high before this push down. It fails to trade back above it, and then it pushes down again, and then notice how price fails to trade above this low, this significant low, as this is the push down here. Fails to trade below there, pushes down, double top, pushes down, and this was a potential re-entry. Jeev at Capital Hungary, he said this was a good entry. For me, I don't know. It was a tough entry for me. This is the new 3 o'clock candle, tiny top wick, and then we get a push. This is probably be the best entry, but you're anticipating price to close below here. But at the time, I didn't have the fundamental bias in mind as well, with the US data being poor and investors putting money into safe havens, with US dollar being the reserve currency of the world. It can strengthen safe havens such as JPY. I'm just going to quickly check now, just to see. I'm just going to test that. Test that idea. So let's have a look at the Swiss franc. 3 o'clock, gave a decent push down from the news result on the pound. Let's have a look against it's fucking exotic as fuck. But yeah, it does seem to strengthen safe haven pairs. Again, 3 o'clock, strong push down on the hour there. CH. Again, 3 o'clock, strong push down. So I think the negative US data gave strength to safe haven currencies such as JPY and CHF as well. So if I had that idea in mind, and we're expecting this bearish structure, you get a closure below 153,200. You're expecting price obviously to break this bottom of the order block here. You could either enter here, but it's the hourly open, isn't it? So probably best not to. 10 pips stop loss above these highs here, and then obviously you need price to break below these lows to confirm, to keep the trade running. Price does that, pushes down, closes below the next key level, 153. Nice strong bearish candle. Get a nice retest here as well. Not exactly at the key level, but just below it. At this point, my head was just fried. I didn't capture any of these continuation moves. I think at the time I was just thinking like because I've missed this, and then I got told it, and then I realised this could have been a good entry as well. Even though it is tough for me on the hourly open, I would have liked to see more of an hourly top wick. But I guess you could have entered here as well, late entries. As you break this lower, but then you'd have to have a continuation move. But I didn't have that fundamental bias in my as confluence. I didn't really think of the safe haven strength in him. So that's something to learn from. If I had that bias, that fundamental bias in mind as well, I could have been, had a stronger belief of GJ pushing down so hard. So we did. We closed way below this. We now created a new low today on GJ on the intraday. So you would expect price to push down to maybe come and test this low now, and then hopefully we can get a nice pullback towards 152,800. See how the daily closes as well. Let's see if it closes below this this low, which we got this push up from. And let's see if we can get a retest and then we can go and test 152,500 again during London session, hopefully, or that might play out through Asian, and then continue lower towards these lows here, 151, 500. So yeah, back to holding runners. Again, see how these lows here. So we have this low printed, and then price action respects this low twice, respects it twice, 3 times, continues down. Another potential re-entry. Get the 15-minute top work up here, failures to trade above, and you get a close below the key level and the close below this low. I think this would be the best entry point, in my opinion. Stops above here again, 10 pips. And you get and then see how price fails to trade above this high here. Doesn't trade above convincingly, instantly gets rejected, and then retest this low here. So yeah, sell plays to be had on GJ today. I closed my trade right at the fucking top of it, start of it. Well, not the start of it, that was the start of it. That would have been very high risk, high reward. But this wasn't, it was an aggressive entry I took, and very nearly stopped out. But I did like how price was respecting 153,500, and I entered off this candle there. There's double top scenario and then a strong bearish candle. I entered there, and it would have been ideal if we got the hourly closure below this level. I'd have been much more comfortable holding it with a new 4 hour. Opening up, that was the idea, but we just kind of messed around a little bit. But we did have a bearish market structure throughout London and New York. But one thing I noticed as well is when I entered, resistance here. We did have an hourly closure, bullish closure. So it was kind of called a top really. It did fail to close above 153, 500, and previous it was retesting previous support, but it was bullish. But one thing which was it going for me was we did have a 15-minute bearish resistance, but it is tiny really. So it was aggressive. It wasn't really. That previous 15-minute bullish candle as well was quite small as well, so I was showing some sign of exhaustion. But the hourly did close strong, but bullish. But overall, we did have these consecutive bearish candles, so safer buys would have been above, with closures above this level, back into the range, and then finding support above 153, 500. So, is what it is. Another lesson I learnt today, but at least I didn't lose much, but could have won a lot. Right, in terms of what I'd like to see tomorrow. Right, we had a nice strong daily close. I'd like to see a retracement up to either this daily resistance, resistance here. Daily resistance, retrace cells. See that daily top wick up here, rejections, signs of bullish exhaustion, and push down and fill this daily range. This daily wick here, target 153, 200, and then eventually these lows here, 152, 200. That's the target. That's where I'd like to see GJ go. For buys. I'm not even really interested in buys at the moment. Surface buys would be above the highs have printed this low here, clear rejection area. So that'd be what key area wise, it'd be these wick rejections to the left here. I with 800 level here, but have to be aware of these 4 hour levels just above them. Surfaced 154 surface buys. If we do consolidate in between 152 800 and 152 500 from now on, I would like to see, I would be interested in taking sells at this key level as well, at the top of the order block range. Let's have a look at gold. Right, so it's quite strange, really, because we had this PMI data come out, and it's we had strength in the dollar after the results came out, which is a little bit confusing. I don't know why. And maybe because it's good. If the score's above 50, it still shows growth within the manufacturing sector. So maybe because even though it was worse than expected, but it was still above 50, that was still fine for the sentiment of positive US dollar, positive US dollar. So, or maybe we're just setting up for these FOMC meetings and early indications of hawkish results. Maybe people have clocked on that it's good news coming for the US dollar tomorrow, and that early investors have we've had early investments into the dollar on the back of early speculation that we'll get more positive and hawkish results for the US dollar tomorrow with the FOMC meetings coming up. In terms of sell players, well, in fact, first there was buy players, and I did miss this because of the time in which this played out. I was looking for buys around these levels here, because basically what happened this morning, we had DXY, as I marked out earlier. So I marked out yesterday, if we get breaks of these lows there at 192,200, then I'd play that USD weakness, continued weakness, and potentially see DXY come to these lows and retest this price action here. But we did get a bit of downside movement on DXY, but that was soon corrected at around 8 o'clock and onwards. It was corrected, and we just we had a bit of a fake out scenario, and we strong bullish candles on DXY, and eventually tested these highs of $92.600. But I was trading around London session, and I was looking to play this gold strength as we were getting hourly closures, consecutive bullish candles and hourly closures above 1803. But I did try getting an entry. First of all, really, I wasn't up early enough to catch the initial closures above. These would have been nice entries. Closure above resistance and above 1803. You can see clear reactions to it as well. That would have been a good entry during Asian, but I don't another nice entry during Asian, but I don't trade that time. Perfect retest, and then you just hold your buys once you get closures above these highs here. That played out very nicely for people trading during Asian, and again, this was too early for me. 7 o'clock, just before 7 o'clock. So I was looking for continuation, and I thought that we've got a nice order block forming here and a big enough price range to take a trade up to the next key level. So I did get a late entry around here above this high, which was quite silly really, because there was wasn't the size of the candles wasn't really favourable there. Wasn't really ideal, the volume in the candles, and I did get a small squeeze. Small squeeze above. It's a tight stop. Did get a small squeeze above it, and then it just rejected and ended up getting out around break even. Price like pretty much bombed below this low here. So I did end up getting out. And then yeah, I wasn't looking. I was working on my computer. And we did get a retest here. Double bottom, strong bullish candle. Could have took a buy there. Not an ideal time in terms of just 20 minutes before the 10 o'clock candle, but it's quite a strong bullish candle, and I just need to start trusting these key levels, to be honest. I need to trust them more. If I get good reactions to them, double bottom scenario like this, regardless of the time, just take it. Take the trade if that's I was originally waiting for this retest of 180.3, and to be fair, I did get an alert. I did see this. I did actually see this, and I thought for one reason or another, I just didn't take the trade. I need to be more. Need to just have a bit more balls, really. Just fucking take it. Looking for the perfect sell part at the times, and where are you going to get that? But yeah, strong reaction to 1803. Take the trade. In terms of managing it, never goes even back to entry. You would expect maybe a bit of potential drawdown. We have got these sensitive price areas here. This is nice though, looking at it now. Perfect. So you get closures above these sensitive price areas, and then you retest them. Failures to close back below, and then you get another high printed. Pullback, failure to close below again, this range. So you're back into this range now. You're expecting price to at least go and test these highs. Let's put this price across here. And you see it respecting it, pushes above, 30-minute candle opens, liquidity grab at these lows here, but fails to close, fails to trade below these lows, instantly rejects, 30-minute open, 30-minute candle, top wick starts getting formed, slightly rangy, but no reason to close your trade, just a bit of a consolidation, but no lows are being broken, new highs are being printed. These lows aren't being broken, not being broken, ranging a little bit. That low doesn't get broken still. Off it goes, gets to the key level. So that would have been a nice trade if I would have took it. Just trust the key levels. And then we have the 30-minute candle at 1:30, close just below 1812, and then we get for the 30-minute candle open and just push to the upside, not giving much of a bottom wick. And you could have took a trade as we closed above the key level, but I just didn't like it. I just thought I didn't like how the 30-minute closed just below it. I didn't like how there was no top wick being formed, no bottom wick being formed, really. Very minimal. I just didn't trust it. And by the time that's the new 30-minute. I just thought, just looking at the 30, I already pushed up quite a bit. I felt like I was buying at the top of the 30-minute. I would have liked to seen I would have took a trade if it would have come down and then retested it nicely. Failure to break these highs here. I would have been more open to taking a trade there if we found some support above it, and then rather bias to these highs and extend if we started closing above them. But we didn't. This was the start of the sell play. Look at how we retest the key level as well. We was on the live stream. We was looking for buys above the key level, because of the positive data. No, because of the negative data. Sorry, we were looking for buys above and then to test these highs and continue further. But yeah, we just for one reason or another, it's the US dollar strengthened. It's nice to see the reactions to the key level again. Retraces to it perfectly and then eventually drops down. Retest this key level pretty well as well. But it was hard to. It didn't take any of these sell players because we had a bullish bias. So, but it's nice to see the reactions of the key levels. Yeah, in terms of trade ideas, we are at a bit of a decisive point. Oh yeah, this is another thing I noticed. Check this out. 38.2. Perfect discounted level rejection and key level rejection, which I've seen just breaking down price action after. I didn't see it in real time. But yeah, we did have a strong rejection there. And maybe because we have got a sell side bias on gold overall, so maybe this was the monthly pullback, the monthly top wick, and maybe this was the monthly top wick, the quarterly top wick for this push down to these lows here and potentially beyond. So bearing that in mind now, we are at a decisive point. We're just above these sensitive price areas and key level and the range which we broke out from. So if we was to close back below it and form resistance, then we'd argue we've snapped back into the range, and you'd expect this to be a fake out, and for us to go back down and test the bottom of the range at least, and potentially break down and test these lows here. On terms of the daily, strong rejection, still bullish but very strong rejection, and a 38.2 discounted level rejection, premium level rejection as well. So yeah, I'm sell bias on gold for now, unless we get poor US fundamental, we get a poor FOMC meetings minutes, we get poor news coming from that for the dollar, and then we see this downside move corrected. Or we could get good news for the US dollar and then continued downside on gold. It's definitely a possibility. Right, I've got a call now, so I'm going to close this, and I'm pretty much done anyway.